Talk to the management of Max Life Insurance. Joining us right now, Prashant Tripathy, the MD and CEO. Prashant, hi, good morning. Life insurers have managed to clock in a good 33% growth in the new premium segment in Feb. What, according to you, has led to this kind of strong growth at the sector level, and are the trends sustainable, you think?
Good morning, Aisha. Thank you. Actually, you're right. The life insurance industry is doing quite well, actually, and this is not just for February. I think for the last 3 years, the performance of life insurance sector has been particularly good. Though in the initial part of FY19, we saw relatively slower growth rate, but we must remember that it is coming on the back of 2 consecutive years of plus 20% growth. In the month of February, we did see remarkable pickup. The numbers that you're talking about are total industry growth, including all premium. Generally, we measure life insurance also on the basis of what we call as APE, which is individual premium adjusted for 10% for single premium. On that basis also, we saw robust growth about 16%. Generally, we see last quarter to be the heavy quarters. As the year end comes to closer to March, we see good pickup in January, February and March, and it is a reflection that the industry is growing. And by the way, the overall industry growth rate for the last quarter was slower than the first nine months last year. So the base is settled, and now we should expect to see higher growth as we move forward. So we are set up for good growth numbers if everything continues the way it is.
Broadly, the insurance industry growth has tapered from what we had seen during the note ban levels. Do you think that the industry premium growth is now going to follow a slower growth trend post the high growth period of the note ban?
So basically for 2 years, which was FY17 and 18, we saw significantly robust growth, upwards of 20%. And that, of course, came on the back of demonetization and formalization of saving patterns. So that continued for 2 years. And, as you just mentioned, for the first 9 months, we saw, with respect to the first 2 years, relatively slower growth. But I think fundamentally, the growth continues to be quite robust. And as the base settled, we should expect that moving forward, we should see a growth rate of early teens around 12, 13 or 12 to 14% at an industry level. Within that, I must say the private industry is growing faster. This year we have seen for the first 11 months the private industry growth on APE basis to be 11%, and that picked up reasonably well. In the month of February it went up to 16%. So as we move to next year, and the base settles, I think I will expect the industry to continue to grow at early teen levels.
Okay. Max Life NBP has grown strongly at nearly about 24% in Feb. What is the growth that we can expect for the entire financial year, and most importantly going forward into FY20?
So, Aisha, that's a very important question for us, and like we have mentioned to the market and everybody that we are chasing what we call as a 25-25-25 strategy. So we hope and expect to remain a 25% kind of a growth company. For the first 11 months, our growth on AP basis is 22 at total at around 24%, and we hope to finish between 22 to 23% range for the year. Going forward, my expectation will be similar growth rate in the range of about 23-25%, and that's going to happen on the back of multiple things that we've initiated, and if you allow me, I'll just talk about a few of them. We are quite focused on building our own channels, and early last year we started to make investment in growing our own agency channel. We made investments in opening about 140 new office units. So that expansion continues, and in addition, we have also made investments on newer channels, direct channels, as well as the internet channel. We are very excited to start to work with our old partner, New York Life. We have gotten into an agreement, a partnership arrangement with them, and we have 3 of their ex-senior officials who are here to continue to work with us for 1 full year, and that should give the impetus to our own channel. So in 2 to 3 years time, our own channels are expected to reach around 40% total contribution. Equally, we are also working very closely with our very prized relationships that we have with our bank partners, and we continue to maintain momentum with them. So with these 2 distribution initiatives, our sales is expected to maintain the positive momentum that it has shown for last 2-3 years, and we are hoping that for next 3 years we will be on the same journey.
All right, we'll let you go then on that note. Thanks much for taking time out and joining in and giving us a sense as to how things are shaping up for the sector as a whole, as well as the opportunity that you foresee.